Okay, Krishna Kumar joins us now, or KK as we always like to call him, represents Sundaram Mutual Funds. KK, morning, thank you for joining us. How bad it could get before it gets better, because bulls are getting boxed. Global trade war, local election, flows moving away, and acute slowdown in a sector which you love to own, autos.
Sure. I think, we have seen this all through the last 6 months also in terms of how the global macros have been panning out from short-term events and long-term structural changes. So I think what is here to stay clearly is that the developed countries are into a softening growth mode, which will keep inflation, interest rates and liquidity very favorable. So this is a very constructive framework when you look at emerging markets. Having said that, you do have these events in terms of Brexit delays or in terms of uncertainty of a trade war with China, US, going to the last mile. So these are some of the issues in addition to the Iran sanction, etc., which keeps the markets, on short-term volatility mode, which is a good opportunity to get into the market from a medium-term perspective. So I think we continue to remain quite constructive on the India story and the EM story over the next 2 years, and definitely I think the slowdown that we mentioned on the auto space, on the consumer space, has been triggered by tightened liquidity conditions and higher rates in the domestic system, so which have been fell through. So it is like a little bit looking at the rearview mirror at this point in time. Going forward, I think we do see already the inventory levels are getting cleaned up in the system for the automobiles and consumer goods. So in the next 3 months, we should see some kind of a positive direction on these metrics for these companies. And the festive season, which will come into August, September, could be a kind of an inflection point for the consumer discretionary space at this point as we look at it. So short-term uncertainties will continue, and we are still into the election result time, which will again throw up a lot more volatility.
Hi there, morning, Krishna. Wanted to just understand the overall concept of pledge shares. The fact that the recent reports indicate that there has been a significant amount of pledge shareholding of over 90% in the quarter of March. Now, while pledging shares is not completely an unnatural thing to do or a wrong thing to do, the fact that there is a significant portion of it that is pledged, that seems to unnerve investors, and we've seen it with examples of the SL group or the ADAG group of stocks. What do investors do in this case, and what is your take on the pledging of shares?
Yeah, so I think we have to deal with the company from its business merits, basically. So there are certain groups and certain companies that one would be very wary of in terms of corporate governance, in terms of the transparency in which the cash flows across the group companies. So one would definitely stay clear of those opportunities. But when there is a good business case and where there are potential suitors to come in and buy stakes, I think there one needs to be a little patient, and that could be a good opportunity in terms of special situation. So I think there are a lot of opportunities in the markets in terms of special situations as we see it. Definitely corporate India has leveraged itself over the hill and over the last 10 years, and that's coming to kind of bite them. So wherever I think business decisions have gone wrong, definitely promoters will have to kind of make way and get in strategic or other private equity partners to help them improve the balance sheet or the business. So I think it's a very good space to look at, look at opportunities which can be a significant turnaround over the next 12 months. So we should take it up case by case and look at good businesses.
Well, KK and I believe that tomorrow will be better than today, but by the time we will migrate from today to tomorrow, the pain could be excruciating. I mean, do you think, Mark, we should not expect any returns for next 6 to 8 months? Are we going through that patch where slowdown, macros, earnings, political mandate, all those things, unfortunately they've come together, but they will keep the market under check. Do you think this market has done what it had to do for this calendar year, and for the second half of this year, for next 9 months, there is only one way this market could go, and that is down?
See, I think the rally in Feb-March was a little early, driven by a lot of passive money which came into the EMs and particularly India also. However, if you look at how the 3-year returns have been across the broader markets, a lot of the mid caps, small caps have terribly underperformed the large caps in that sense. Also, the last 1 year, and the calendar YTD returns again clearly do point that there is still a lot of softness across the broader markets. So I wouldn't look at the Nifty as a kind of a bellwether number to look at market, but we would like to see that broader markets, beyond those 10-15 stocks which have really pulled up the Nifty. If you look beyond those stocks and beyond Nifty itself, I think there are many opportunities which one can look at. And since we kind of start discounting 6 months, 1 year ahead, at this point in time, I think the election uncertainty will be over in the next 20 days, 15 days. And also, if you see, core sector numbers have been very good in March, and so we are seeing certain indicators that the broader economy at the core level is doing little better than what one expected. Consumer definitely is weak, but I think it's more a sentiment issue and a liquidity issue from an NBFC side. So those things will sort itself out in the next couple of months, is our belief, as banks also push more into the consumer retail space as they've been doing. So we remain optimistic about broader market rally over the next 6 to 8 months in the fiscal year. And so I think instead of taking just a view on the Nifty in terms of levels, which may possibly be a good number from a sentiment perspective to look at, but I think broader markets will give you double-digit returns is what we expect over the next 6 to 8 months.
So, the question, KK, then is, do you buy this decline in consumption with the assumption, like you're saying, that the recovery will come in sooner or later, maybe another quarter, 2 quarters, or maybe even 4 as well, but the stocks are not going to wait for that long. So do you buy the current decline in any of the consumption names? And if so, where within the large umbrella of consumption do you find opportunities? Pure play, FMCG, auto, they're all falling.
Yeah, so the whole idea, I think, the portfolio strategy now would be to be a lot more diversified. We have played consumer, in a big way over the last many years. Definitely, while the consumer is going to be back with a lot of spending on the cyclical side on discretionary products, which you will have in the portfolio, and use this correction to add quality names. But I think more importantly also, we should look at broader other segments of the market. If you do look at these other cyclicals in terms of cement, infra, capital goods, industrial, I think there is a lot of underweights in those spaces across the big investors, and also the retail sectors have been ignored in the past 2 to 3 years. So we see a lot of money trying to chase value in those segments where there is an uptick from a growth perspective. Cement, for example, if you do look at, I think has been registering double-digit growth, and I think the projects that are happening are continuing and will drive growth in addition to the affordable housing, and also pick up that we are seeing across the real estate space, which is happening slowly, but it is happening. So I think cement, the capacity demand supply is very favorable, and after a long while, and I think over the next 2 years we would see very strong pricing power, so it should be a strong sector to be in. So I think we need to spread ourselves out, create a more diversified portfolio which will represent good growth opportunities at a reasonable price.
Some stocks here, and like I said in the morning, that the storytelling is now becoming slightly more difficult to convince people to buy the stock.